What is up, everybody? How we doing? Happy Sunday. Probably should turn that down slightly. How is everyone doing? Welcome to Market Kickoff with Nick4ATick. How was everyone's week? How was everyone's weekend? Before we jump in, quick sound check, video check. Everything looks good on my end. Andrew confirmed. All right, we are all good. Let's talk a little bit about last week. How did everyone do? I weirdly struggled for some reason, which I guess no surprise when we tend to just kind of drift up and to the right with minimal pullbacks. As a more of a rotational trader, I just tend to struggle. There wasn't a lot of, momentum at all to the downside, with the exception of whatever you want to call the second half of Friday. Obviously, not even volatility, just a little bit of a dump into the end of the day. I don't know if we can read too much into that, to be honest. I guess we'll have to kind of see, because the logic is going into this week, this is the Super Bowl for just about everything. Super Bowl's in 2 weeks, but it is Championship Sunday, I guess, and it looks like the Eagles are still ahead when I just quickly checked before I jumped on air. And I'm on Team Build's Mafia as well, so I don't really want to see the Chiefs again. I'm just tired of that show. Anyway, going into the Super Bowl of this week, we have a pretty wild plethora of data, information, and earnings. This is going to be a weird week. This is going to be a week where I would imagine how people are positioned from an institutional standpoint in terms of options, in terms of everything else, will probably tell the tale when we look back next Sunday, as far as, well, maybe this week was more obvious than we made it out to be, just based on, where we close at certain times in the given week, how we move, where different areas that act as support and resistance. Sometimes when you look back at those volatile weeks, those event-driven weeks, those earnings weeks like this, it kind of tells a tale at the end of the day when you look at, single stocks as well as the indices, kind of where we are at, where we close, how we react to earnings, where we kind of settle once the dust kind of clears, like after like something like FOMC on Wednesday. So all of that being said, this is a week where, not much may happen until Wednesday. It could be a quiet start to the week until we, with the exception of a Trump tweet moving the markets. Whatever's going on with Colombia made me laugh this in the last few hours, but how'd everyone else do? I was struggling with that price action, those slow moves, kind of where you had to catch the one decent move early in the day, or just get long and hold it for most of the session, which is it's just not my style. If you guys saw on whatever day it was, I was on Fast Markets. I want to say Thursday. Yeah, I was on Fast Markets on Thursday. If you guys remember, we were waiting for Trump to talk at the World Economic Forum or whatever it was in Davos, and we were kind of just waiting for things to happen. And I didn't take a trade that entire Fast Market session. In fact, I didn't take a trade until the afternoon, and I ended up shorting like 38s and then wrote it down not very far. I think I wrote it into the the lower 20s and then covered, and then we kind of rebounded and closed, I think for that session right around the point of control for the day. So one of those where you take your points when you got them, but that was the only setup that I really saw because I missed the longs out of the gate when we were holding. I think we were looking on NQ, somewhere around that, like, was it like the 870s, 880s kept holding all week? We'll look at NQ in a few minutes, but there wasn't a great amount of trades. In fact, even Friday, I think I only took like one small scalp for about $400. So pretty quiet week for me. And then I had a daily loss limit on Monday. So almost a flat week, if you will, for my P&L on my live account with Topstep. And, kind of struggled just overall with my trading. A pretty flat week. Had some winners, had some losers, ended up catching, to save my week, basically catching this flush with some 0 DTEs on Friday afternoon to kind of salvage the week, make up for some theta decay type losses where it's just we weren't moving, and I had to cover some options trades just to get out of them because they're going to eventually go to zero because we're just not moving. There's just no volatility. It was that kind of week where if you were selling premium, you probably made a lot of money. So that being said, going into this week, knowing all of the event volatility that's going to come between FOMC on Wednesday and the Mag 7 earnings kind of kicking off Wednesday and Thursday, I believe we have, 4 of the 5? Meta, Microsoft, Tesla, and Apple. 4 of the 7, excuse me, not 4 of the 5. 4 of the 7 reporting, and then Google, Nvidia, and Amazon will be in the coming weeks. They're all, I think Google might be next week, Amazon might be the week after, and Nvidia, I have absolutely no idea. So I don't know. You're seeing rumblings when it comes to Nvidia of this past weekend of DeepSeek being this new hot toy straight out of, I believe, China is the HQ. Someone can correct me in the chat there, but it seems like people are liking it. I immediately thought a little bit of maybe possibly some vaporware because you never know, but it seems like, at least from what I'm reading from people, that might actually be something and use a lot less compute. So it will be interesting to watch how just the talk track of that going into the early part of this week, how that may affect Nvidia, how that may affect the Mag 7. So we'll have to see, but any sort of news, it gives you a reason to maybe take some profit in some of these names that have moved, especially if you were in the AI trade before, up and down, that it's kind of been moving. So going into this week, I mean, a lot is going to probably happen. We could have a very tight range, be wildly range bound would make a lot of sense this week. So naturally, I'm going to put my pivot for ES back down towards last week's value area low here around the kind of 680s to 85s, at least in the early part of this week, and then probably drifting a little bit lower as the week progresses. This is a week where this may mean nothing. And we talk about prep, but this is the type of week where you could do all the prep in the world, and Wednesday we could be in a completely different area, and it becomes irrelevant. And some of the other areas that you need to watch for become more important, and that's why I like to plot. Like I said, I look back at previous week's volume profile. I will have other levels that I have marked on my 4-hour chart, just because if we leave this range, and I know this is a pretty wide range when we're looking at this 4-week balance that we kind of finally broke, but now we fall back into the old like pre-FOMC all-time high air horn range where the market is going to need to make a decision. Otherwise, we may just chop between, kind of sub 6,200s and back down to probably 6,100. And that 100 to, let's call it an 80 to 100 point range is equally possible. If we don't kind of get a move, we could just kind of balance and wait for FOMC. And naturally, when we're going to do that, and potentially people making bullish bets on the first half of the Mag 7 earnings, if those are strong, I mean, yeah, we're probably going to go hit an air horn and make a new all-time high. FOMC, if Powell starts, giving in to what Trump was talking about last week, which is demand that rates be cut, we could definitely go back up and continue to get that initial bullish reaction to further rate cuts, which may not actually be a good thing right now. I know we had the CPI candle that showed us inflation had at least not gone up again, and maybe slightly has decreased finally once again. We'll see. But I don't think the Fed's going to do that personally. I don't think they're going to cut. I think they're going to hold this week, but I don't get paid to make those predictions. That's just kind of my gut going into this week. I just would imagine they're going to continue to hold, be data dependent, be blah, 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 everything else they've been saying since, 2022. God, it feels kind of crazy that this inflation cycle has been as long and crazy and volatile as it has been over the last, whatever you want to call it at this point, since COVID. It just seems like this has been a very long cycle, and I don't think we're even towards the end of it. I think this is going to kind of continue to not be transitory, as was their favorite word in 2021. So yeah, like I said, going into this week, I'm looking for us to at least come down and tag potentially the 60-80s spot. If we got any weakness, I would not be shocked to see once again the kind of lows of Friday, even where we close. Like this may act as resistance. And the reason is you've got all this volume going back to that pre-FOMC dump just sitting right here. So this may be a tough level to crack now that we've kind of pierced above and are starting to build, continue to build volume in this area. If it holds right around the 6130 spot, we could just continue to kind of drift upwards until there's new information. Obviously, that new information could come from Powell's press conference on Wednesday. It could be the Mag 7 earnings, everybody blowing it out of the water. Tim Apple saving the world if Microsoft and Tesla and everybody else has slightly weaker earnings. It's set up for another bullish week unless they don't outperform the way they've continued to. I know a few quarters back, I think Microsoft kind of spooked the markets, but then the dip was bought within a session and we were, continuing that uptrend. So hard to make too much up of this. It just most likely is going to be a volatile week. And we'll talk more about the, all the different earnings coming out from companies this week and the other data releases. But for the time being, like I said, if we were to come down here, I'd be looking to kind of, stay bullish and stay long in above 60-80s for a trip back up towards a new all-time high, hit an air horn, everybody, confetti and Lieutenant Dan at the bar reaction from me, because some days I just can't explain it, man. It's just, that's just the way it is with everything else going on with the new administration. I mean, we could still be riding the Trump change kind of hype, and until new policies or new things in place, it's just everything is fine, all things are a go, let's go make a new all-time high. That being said, let's jump over. If we were to lose the 60-80 spot, we likely fall back into this wider balance range that we were in post FOMC dump, which would kind of put us in this range somewhere between the 60-70s all the way down towards 5900s. So if we were to lose that kind of 60-70 spot, it's logical to think we could rotate all the way back down towards the point of control from all this area, which is going to be, I believe that's Hoag's weekly kickoff low as well. It is. Yeah. So the, basically the 6,000 area, the 5990s, which I think we were talking a little bit about last Sunday, which we might have even opened right around there, or maybe it was 2 Sundays ago. No, it was last week. Yeah. So that if we were to lose that 60-80 spot, I would expect a potential trip back down. So once again, we don't talk about this being a, hey, everybody get out and short as soon as we break this level. It's more, hey, do we consolidate? Do we see sellers continuing to reoffer, defending that area once we have broke it? In which case makes me comfortable to kind of ride that short back down towards that kind of mid 6,000s, and maybe that full rotation goes for the week, goes further back down to here. I don't think without some change in the narrative, and like I said, it could be FOMC, it could be Meta misses earnings, who knows what the reason or catalyst could be to kind of send us back down if that was to break, but that's where I'd be looking for. You'd expect dip buyers to come in from the last couple of weeks at least and defend this area. Otherwise, you're talking the rotation back down towards the election lows, which I don't think we get unless Powell scares the life into this market. So yeah, you have to keep buying the dip until the narrative changes. And like I said, that narrative changed 2 weeks ago during that CPI candle where inflation is once again defeated. So until the narrative changes, guys, and whether it's something signaled from the Fed or it's PCE coming in red hot on Thursday, Friday, whatever day it is, we'll check. You should be looking for dips to buy. So the first place down there. Next place is going to be back towards the consolidation, this value area low from last week, and then kind of that low point for the week back down here towards the 5990s to 6,000 area. I would expect 100% to be defended, at least in some capacity, back down towards that area. So We are coming into the open, so we're going to watch it on ES, and then we'll jump over to NQ. I know that was a long-winded bit of prep on ES. Oh, and we got a big gap down. Jumped off my chart. I don't even have it on. Oh, no, trading. Okay, we do. Trading View is just, for some reason, not printing a candle right now. But Topstep X is. That's all that matters. I don't know why Trading View freaked me out. I thought it literally like dove off of my screen. But we are gapping down back toward 6100s on ES. Let's jump over to the NASDAQ. I have no idea where it's even trading. That's something. That's a gap. I mean, nothing crazy. You're talking 20, 30 points. I guess it looks more dramatic on ES, to be honest. NQ didn't really gap down that much from settlement. ES really just gapped down 30 points. Am I crazy? Someone confirm that? Did ES really just gap down 30 points, or is my data all weird? Oh no, NQ did. Okay, Trading View is dumb. Okay, so we're not gonna look at Trading View because for some reason that's not working right now on my screen. So it's right here on Topstep X. I don't know why I'm looking at Trading View when the other screen has the data. So we really did just gap down like 100 plus 200 points. What? We really did just gap down 200 points. Sorry guys, I was looking at a moving average over here. That's why. Wow. All right. Was there some piece of news or anything else that I missed going into this session? No, I don't think so. I can't even see the dang candle. So we are trading at 21,700 on NQ and 6,100 on ES. So that is a hell of a gap down. I don't know exactly why that is. Maybe because Trump is just throwing around the T word, like all willy-nilly over immigration. Who knows? So that's pretty crazy. That kind of puts an interesting spot because my first place that I was going to suggest looking for a dip to buy in the NASDAQ is going to be around this 21,720s to 21,750s, which is a level I was talking about last week, which is basically last week's value area low as well on the NASDAQ, but we gap below it. So throw that out, I guess. That was going to be my first initial logic would be like, you know, we were holding kind of those mid 800s. I expected on Friday, we just couldn't quite flush to this general area with the kind of dump in the afternoon that we saw. So this is potentially a decent area. When we were flushing, it's like there's a ton of volume here. This was like kind of that first place I was expecting buyers to potentially defend, come back in. But I was looking for us to fill in some of that volume as well from the previous week. We kind of just kept going up and to the right. And so the NASDAQ naturally doesn't print a lot of volume when things like that happen. So I was expecting us to potentially start to fill this in, but as we gap down, I mean, the narrative changes a little bit in the NASDAQ, because then you're now 100% back into this value area. And I guess the question becomes, if you get continued weakness in NQ this week, well, just like we said in ES, the logical place we're going to go is back down towards the 21,400s, this larger point of control, the kind of center of this balance area going back since the FOMC flush would be a lower end target. But for the time being, we're now below this value area low. This could dip all the way back down towards the 21,670s, probably to... I mean, that's a pretty decent range, guys. Back down towards kind of the lower edge of last week, down here towards the mid fives. So I would definitely be looking to be hands off in this. I mean, I don't have a good reason for why we just gapped down 200 points. I mean, I don't think we've seen that. I mean, we see crazy gap ups. You don't usually see this without news, and I didn't see any news. This is a little nuts. Let me check Financial Juice while I'm just sitting here with you guys. No. Lebanon, Israel to commence discussions on the release of detainees and Trump's tariff talks on Colombia. Otherwise, I'm not seeing anything that really would be this reason. I mean, would a Trump tariff threat on Colombia over immigration be this much of a thing? I guess if he's really just kind of throwing it around like that so casually, it's very possible that, the same thing could be true if he threw it at a number of other countries just like that as a way to, actually start conversations for negotiating whatever agreements they're trying to. So maybe it is. Maybe I'm just crazy. If this is actually from the Colombia thing, which allegedly is from just, an immigration plane being turned around, but that's pretty crazy. We are still moving lower on the NASDAQ. ES is kind of still holding that 6,100 level for the time being. So like I said, we'll continue this prep, continue to watch this. This is a little wild. I hate Sunday Globex gaps, especially to the downside, because they always get filled eventually. Doesn't mean it happens in the session, doesn't mean it happens in the week, but they do eventually always get filled. So just something to keep in mind before you just start throwing things down to the short side. And I didn't check let's look. The spread is pretty bad. 2.5, 3 points on the NASDAQ. I mean, it's jumpy. These are ones and twos. So be careful, guys. If you are trading this off the open, it's probably going to be pretty violent here in the first 30 minutes, at least until, things settle down a little bit. But yeah, using the words, and someone in the chat just said it, using the words emergency tariffs like that. I mean, maybe that's really what it is. It's just, how casual it can be. And it can affect, commerce, trade, every company that does business in those ways. So we'll continue to watch. But like I said, this is a decent area, just knowing this is kind of the value area low. If we can hold 700s, there's nothing wrong with trying a long. That was my first instinct, is to try to get long in this area. And actually we did bounce right off that kind of 660, 670 level. That is where this died. So that is still a decent spot in kind of the mid to high 600s, and to potentially ride this back up to this low volume node and fill in some of this volume from last week, back up here towards 800s. 21,800s, I feel like, is a spot we've been talking about for a couple months, to be honest. Just it continues to kind of be support, continues to be resistance. We haven't traded a ton of volume there. It is. In fact, the basically the value area high, at least going back a few months. So definitely is continuing to be kind of an area that makes sense to look at initiating trades. But the same thing is true if we can continue to build back a volume above 700s, get up to that 800 spot. I'd be looking for a trip back up here towards the 22,000s level, especially with Mag 7 earnings on deck. If we continue to have a kind of bullish reaction, if you see buyers continuing to defend this general spot, it's logical to think we may continue to move a little bit back up. It was interesting that, NQ kind of struggled in this 22,100 spot, could not really get up back towards the all-time high area and that kind of pre-FOMC dump area back up here towards 22,300s. Just was not quite as strong, with that push up last week that ES was. So something to keep in mind is that we still haven't kind of gone back up and retested that ES now has. So that's something I'm just keeping in the back of my head going into this week. So that's kind of the plan. Like I said, if we continue to see further weakness, the next logical place is back towards all of this volume down here towards 21,400s that I'd be watching. And we said this before, if we really did, I don't think we're going to get that far of an outside move, to be honest, but just an area to have on your 4-hour chart is to continue to just have this kind of 20,400s to 27,350s area, the election lows, basically that election night low. Obviously ES tested in the previous week. NQ has not. It's just something I'm keeping on my 4-hour chart. If we got weakness, I just continue to expect this area to be defended unless there really is a catalyst that changes the narrative going forward. So that's still marked down on my 4-hour chart, is this area. I'm going to continue to watch it if we get weakness to, potentially look to buy the dip in a number of companies, as well as potentially try to long there. If we got an excess low, pierced it, came back in. So that is kind of something else I'm just continuing to want to keep an eye on if we get further weakness. It's not as far as you may think. If we really did get a real weak week, there's nothing to think we won't see 800 point down days when we get a good 2 to 2.5% down day in the NASDAQ. I mean, that's 800, 900 points. So It's not as far away as you might think. That's why it's marked on my 4-hour chart. That's why I'm just reverting back to it. Obviously, we are more in the middle of this balance range, going back to that FOMC flush. So not a great place that I'm really looking to initiate right now. I want to see us hold over 700s before I'm really looking to get too bullish. Otherwise, I would expect the rotation back down towards those 4s. So let's jump over to crude, because crude may be a little more fun to trade this week with Daddy Trump saying, drill, baby, drill, once again. So in hindsight, with his plan, you had to kind of think maybe this would get capped somewhere here. You know, I wanted 80s, 80, I think 80, 50 was the other spot that I'd say cover runners at. Obviously, you would be out of that swing long likely now if you did actually take it once we broke out over kind of 72s. But now with, you know, potentially the drill, baby, drill, and unlocking a lot of different energy policies that will be very, you know, probably very good for our producers of petroleum products and everything else. It probably was a decent short signal just when, you know, he was sworn in and those policies started, you started hearing murmurs of that they were going to do it and kind of roll back some of Biden's and the Democratic policies on like no new contracts for new production and things like that. It just was that situation where if they start pumping in more supply and they actually unlock some of this stuff, yeah, naturally crude might rotate back down and might lower futures prices. It just seems like a very simple, like geopolitical plan of a trade that could have manifested, but my brain wasn't functioning that way for some reason with this. I was just thinking of let's go continue to break up above the 80s. So now it's an interesting spot. We're coming into a low volume node, at least since we've had this breakout. There wasn't a ton that traded here around the 74s. So everybody who kind of took this breakout long crude, I mean, I wouldn't say we're going to flush back down into that old bounce range inside 72s just yet. I want to kind of see do buyers step in at like around the 74s, kind of the lows of last week to just take a flyer. It'd be one of those things where maybe you take a stab long in that general area with a pretty defined stop so you don't get flushed all the way down to 73s, where all of that volume, where I would expect buyers to definitely step in and at least defend the breakout for the time being. But it's a tough trade when you start getting political talking heads just continuing to do what they do. It's tough to, you know, really want to take a trade until you kind of get more information, more resolution, and you really see what futures traders want to do for the time being. Obviously, you know, OPEC and everybody else can throw more wrinkles into this. So like I said, the first place I'd be looking for a long is a little bit lower than this, down towards the 74. See if we break a new low from last week, and then do buyers kind of step in and defend, in which case you'd be looking for a trade back up towards kind of the mid 75s, the point of control of the previous week. If you were to lose that area, so like I said, if you took that long in kind of the low 74s, you have a defined stop. It's possible you could see in the 73.90s as well. But if we were to lose that, I mean, it's very likely we probably rotate back into kind of this balance area for 2 weeks that we were in between 73s basically, and, you know, the top edge of the old balance range. So just something to keep in mind there. I wouldn't be looking for too crazy of a trade as far as, you know, a lot of points in crude going into this week. You kind of just got to see profit take profit until the new trend may be defined, in which case, when you look at this, basically since Inauguration Day, just kind of slowly drifting down all week. So something to keep in mind. If you're a Cran line person, you probably got a pretty simple one there on the 1 hour that you're starting to build. So that's crude. Like I said, if we were to lose the top edge of, or basically the top edge of the old balance and at 73s, of this new range going back to 2 weeks ago, it's reasonable. Let's hope not, guys. I really don't want to see it, that we could come down and retest kind of the lower edge of where we finally broke out from. I hope that's not going to be the case, but maybe there's a decent long there if it gets defended as well. So like I said, first place, 74s to 73.90s, maybe take a stab long, know your stop, know where you get out, because it most likely is going to continue to flush down to the 73s, 72.80s if it does lose that area. I'm not condoning longs, because drill baby drill means more supply at the end of the day, and that could, like I said, lower crude prices. So, but from a technical perspective, you're taking the stab long, kind of in that area to see, does this rally still have some legs, at least for the rotation and retest back at some of the other some of the more higher volume areas that we were trading in until, you know, Trump continued to say what he was saying. So technically, do we do it? Let's find out. At least taking the stab. Otherwise, yeah, you could absolutely take the breakdown short of 74s and try to ride it down to this old point of control down here around 72.90s. Like I said, a couple ways to do it. You see if the area holds, because that was the old high. Like I said, I'm not condoning anybody trying longs in crude right now, but there may be the opportunity. That's all I'm saying. But, you know, yeah, you can disagree with me. That's what makes a trade. All right, let's jump over to GC. GC kind of doing the opposite side of, I think what we talked, not opposite side, but it's coming up to now retest the old all-time highs. Kind of failed around 2800s on Friday, or just below it. It was pretty crazy of a move out of the gate. And then we kind of came up, you saw sellers reoffer before we got to the 2800 level. And now we're kind of falling back into the value area high of the previous week. It would not shock me to see GC come back down again to retest the 2750s spot before continuing higher. 2760s even being the point of control of last week, and kind of the top edge of this old structure going back to kind of early December. Definitely could continue to try long there, but or at least a retest of this area. Sorry, didn't know what I was trying to say there. I could see it falling back down to potentially retest the point of control of last week at 2760s, but I don't really want to short this. I haven't been wanting to short GC ever since going back since August. I haven't been looking for longs in GC. It's just trying to find the right area where it makes sense to get long. So looking at this from the 1 hour, I mean, we just continue to build volume higher and higher every week. So our point of controls just continue to shift up. So what you want to keep in mind, though, is this is now another failure at the same area that once we kind of come into 2800s, you find sellers reoffering. So the more they knock, eventually we're going to break through and probably finally go tag 3000, which is something I've been talking about since September, that just may be the end path of this for the time being. So the same thing has been true. You know, I'm looking for longs. First place, the point of control to this old top of the previous week's volume as well. If you really were to get weakness, I mean, I don't know. I don't want to long it down here personally. I'm still kicking myself for not taking the swing long and not holding my swing long. It is what it is. There's always another trade. So yeah, down here towards the 2760s. Otherwise, I'm going to let it do what it does. If it wants to rotate back towards the 2700s, I mean, I'd rather try a long there versus getting chopped up in this area. So I take that stab long there on a shorter time frame kind of trade for the session potentially, but I'm not looking for shorts in GC. I just have no desire unless the trend changes. So until it does, find dips to buy, just like we've been saying in the equities for the time being. But yeah, let's see what shakes out in crude. Not crude. Let's see what shakes out in gold. ES still moving lower. What a gap down. NQ is too. We are in the 650s, folks. What a wild Sunday open. CL equals drill baby drill is shorting. Yeah. Yeah, I agree. The oil chart is showing drill baby drill being the narrative going forward. So we'll see if any technical traders actually want to step in and catch that knife at 74s, or does it rotate back to the top of the balance? But hey, maybe worth a shot to take a cheap long there. All right. Yes, still kind of holding around 6,100. So we'll jump over to earnings for this week. Ooh, just did NQ just continuing to flush, man. Wow. 21,640s in the NASDAQ, still trading. That is crazy. All right. So we got to get on with the show. As much as I want to watch this, the equities took drill baby drill seriously as well, apparently. All right. So like we said when we came on air, this is a pretty big earnings week across the board. There's a number of big names here that can absolutely move the markets in their respective areas. The biggest ones, you do have Boeing, GM, on Tuesday before the open, and Starbucks and SAP after the close. But the ones everyone's going to care about that are really going to move the markets are going to be 4 of the Mag 7 reporting this week, with Tesla, Meta, and Microsoft kicking off as they usually do on the Wednesday of Mag 7 earnings week. So we'll have to see how things kind of shake out. It's tough to get a good read on how price to perfection they may be. We are trading near all-time highs in the S&P. The NASDAQ's a little bit off. So this is a week that could catch up. We could definitely go make a new all-time high. You have FOMC as well on Wednesday. So if there was an afternoon to stay away, it's probably Wednesday of this week when FOMC happens to also fall on Mag 7 earnings day. So I would expect Wednesday to be an absolute cluster, you know what, just knowing how positioning may be going into FOMC and just-in-time hedging and other things, and then how single stocks may be positioned as far as options. I have absolutely no edge going into Wednesday, I guess is what I'm saying. If you want to trade it, if you're somebody who likes to trade after the bell, I mean, do your start stretching now, I guess. Stretch your fingers, get your, increase your RAM, whatever you need, because that seizure after the bell, I'm sure, is going to be something to behold, especially coming out of the Powell's press conference as well. So wild day there. We'll see how the dust settles, because naturally we move into Thursday, where regardless of how the reaction was to FOMC and Mag 7, it still could come down to Tim Apple, who refuses to innovate any longer to actually save the world once again. And Apple's been a little bit of a dog lately, just has not kind of, kept pace at times, and is kind of teetering at an interesting spot. If you look at single stocks, you guys can check it out and see what I'm talking about. But Apple has not been as strong as some of the others in the Mag 7 lately. I don't know exactly why. I mean, I have my theories, but this is not a single stock show, so we're not going to really dive in too far there. So Apple, and the biggest failure of the AI boom is going to be Intel, also reporting after the bell on Thursday. And then Friday, we got some of the large oil names, Exxon and Chevron, Booz Allen and Phillips, a few others. But obviously the biggest ones are going to move the market the way they do. So you could also see the bullishness in just overall tech. You could see it from software names like ServiceNow, kind of causing even someone like Salesforce or SentinelOne or MongoDB or all the other names in that space can get a lift or can get weakness based on some of these names as well. So if you trade single stocks, just be aware. This is your Super Bowl of a week. All right. Let's jump over. I think everyone knows kind of what's on the docket this week, but we'll talk a little bit about some of the gotchas in the pre-market. Going into tomorrow, we do have the Chicago Fed National Activity Index at 7:30. Not usually a big market mover, as well as new home sales at 9 o'clock Central Time. So a little bit after the bell. And then finally, Dallas Fed Manufacturing at 9:30 Central. So a couple something to watch after we open, and just keep in the back of your mind if you are trading in the first hours of the initial balance period. Just be aware there are two things that could cause a little bit of a spasm of reaction depending on the data, but they're not ones that are going to move the way durable goods and CPI and some of the other ones tend to. So just be aware. The big ones are going to be more so on Tuesday with durable goods, Case-Shiller, as well as consumer confidence at 9 o'clock. Oh, and then we got Dallas Fed services as well, and Richmond Fed. So I don't know what these differences of some of these are anymore. They all kind of blur together. And then we do have, we did have a 2-year auction at 10:30 on Monday. So tomorrow's going to be a kind of a interesting morning as well, just with a couple things that can potentially still move the markets after we do open. So keep that in mind if you are trading during these times. Maybe be flat, maybe just be tight with your stops. They may get run with some of these releases. As always, just have an idea of where some of these are when you are entering trades. You don't get screwed out of a stop out for absolutely no reason when you shouldn't have. And then going into Wednesday, the only one that's going to matter is going to be FOMC. So we're going to probably chop around. You're going to see positioning be weird and wonky as we get to the Fed's decision, which is most likely going to be they're going to hold rates steady at 4.5% for the time being. So everyone's eyes will turn to the dot plot, as well as Powell's press conference, where he will most likely say we are data dependent, and we'll see. We'll see how hawkish he or dovish he may be going into this rate decision. I mean, you guys remember in December, I think he caught the cut didn't catch everybody off guard. It was more his language of we almost didn't cut. And then kind of the talk track around no cuts, 50 basis point cuts, like just not as many cuts as the market was expecting kind of coming out of that meeting and during the press conference. So it'll be interesting to see how that may have changed with, if he even cares that CPI came in like 0.1% cooler, but we'll see. We'll see how the market reacts to the new dot plot, how they're looking at things. And then we do have going into Thursday, initial jobless claims, as well as GDP, pending home sales, and core PCE quarter over quarter, month over month PCE is going to be on Friday. So likely they're going to be looking at that. I don't know how much inflation is, not inflation, but core PCE is still weighing into their decisions. It seems like they're very much just, on their path. And I don't think Trump, some of this data being a little bit soft, a little bit hot is really going to change their trajectory for the time being. But they don't pay me the big bucks to make those decisions and have that perspective. So I'm just here helping you guys. And then we do have Chicago PMI as well on Friday. So plenty of gotchas this week. Just be aware. I don't recommend anybody trade in the latter half of Wednesday. This may be just a weird week, guys. It's tough to have too much of an edge. It's tough to have too much of a plan. It's very much a week where it's see profit, take profit, get out early if you're green. Don't go trying to chase yourself back if you are red. Come back the next session, but it really is going to be one of those situations where price action is going to roll above everything else. So react in real time as best you can to not necessarily some of the data, but how the market is moving based on some of the data. So trust your stops, trust your daily loss limits, your lockouts, all of that fun stuff. And you should have a decent week. All right. So not a lot has changed on the overall options chain. I think with Mag 7 earnings and FOMC, the market may be a little underhedged to the downside, but we will see. Very much still the gamma exposure. So as far as dealer positioning and things like that for options, it's still very much skewed to the north side, with the strikes moving us well above some all-time highs. If we do continue to move higher, likely we will continue to go that way. But just like I said last week when we were talking about the 6,100 level being still a kind of interesting magnet that may still act as one, well, we closed right around it on Friday. So clearly this matters to somebody. Like I said, I don't think you can trade off this day in and day out, but it's just something to keep in the back of your mind when you look at the ES spread against the SPX, that a lot of the time we just tend to drift back to some of these larger strikes. I don't know exactly why. I'm not smart enough to care. I just like to use it to help guide paths that we may go and where areas that may act as support, where they may act as resistance. So the area I'm telling you to watch this week is still going to be, if you see some downside, have an idea of where 6,000 SPX is in relation to NQ and ES going into, the latter half of this week. Obviously, this is Friday. This is data from Friday's close on the entire options chain, but this is a week where you have such a simple like hedging vehicle with 0DTs. Now, you just don't see it as much. So you see a lot of just-in-time hedging with things. So this may shift on a day-by-day basis. So we'll have to look at what it looks like going into, the latter half or the last hour, let's call it, pre-FOMC, and what it looks like going into the following session with Mag 7 earnings. Other than that, I can't place a ton of weight in it going into this week because I just think it's going to change dramatically based on the market's reaction to FOMC and the Mag 7 earnings. So just something to keep in mind. A ton of exposure still at 6,000. So yeah, do with that information as you will. All right. So we've got a little time left. We'll get to some questions. If you have something you want me to talk about, go over, please throw it into the chat. There are a couple, but if there are questions you guys had as I've been going through all of this information, please throw it in there. I will get to it in a few minutes. But yeah, we can talk about anything you guys want to talk to me about, settings inside of TopstepX, methodology that I use, whatever's on your mind. I will jump to the first question now. I see one that I'm not going to touch. Can you break down gamma? No, I am absolutely not an expert on this stuff, guys. I really don't know what I don't know. There's ways to use it. There's a lot of information out there. It's super complicated, and I have tried to keep it as simplistic as possible, which is the market gravitates towards liquidity, and large pools of liquidity can act as support and resistance. If you use it more than that, hats off to you, but it's just too much information. Basically, the way to look at it is it can encompass people buying options, people selling options. And when I was showing you guys that chart, it encompasses the entire chain. So it's not looking at just the 0DTs. It's looking at every expiration that currently exists in theory. So if you really want to understand, that level of some of the Greeks, there's so much information out there. I am by no means an expert on that stuff. In fact, I'm kind of an idiot when it comes to it. I just like to have an idea of where those large strikes are, how they move intraday, and where we may gravitate towards or how price may react when we hit one of those various levels. If you're using it more than that to trade futures, you can get yourself in trouble. All right. Can you share, how do I find volume profile indicator on Topstep? Yep. So you jump over to indicators. There's two that I use. VIX, volume profile fixed range, which is going to be this one that I have set up for each, week. It's not an automatic indicator. You have to draw it yourself. So select the number of candles you want it to spit out a volume profile for, and it'll do it. I think it's helpful with the way that works currently in TopstepX, just to draw it each week or draw it each day. However, whatever time frames you like to look at. I draw them each week on my 1 hours, and then, they tend to kind of disappear when I go to the 5-minute intraday. And then I keep the visible range volume profile on my right side, just to give me a perspective of what the volume by price looks like from any time frame that I'm looking at. So if I jump just to, if I wanted to just jump to part of Friday's session, I basically can get an idea on the 1 hour of what Friday looked like. So you see what I'm saying? It'll just adjust based on what's on the screen. Do you trade the Asia session? I can't win with it. No, I don't. And there's a reason. The same reason is true for me. I'm not a great Asian session trader. I need London. I've traded London every once in a while if I just can't sleep and I'm happen to be up at 3, 4 a.m. for some reason. Asia just tends to get me in a lot of trouble. London tends to be trendy in a couple directions, or just is very range bound and we're not moving. So I have always struggled with the Asia session. It's just Globex as a whole is just not for me. It's too slow. I oversize. I'm trying to create action when it just doesn't exist. Granted, most of the time I trade, it is not like this currently. It's a lot slower and we're not moving. And then I just get stopped out of trades and making poor decisions. And it's not my cup of tea. I have learned that the hard way. So I highly suggest if you need some volatility, if you need speed of the tape, don't bother taking stop outs. If you find a good trade, I mean, go for it, man. But I have never been a good Globex trader, and I'm trying just to get better about taking a peek. Like I said, I do the show with you guys, but in the weeknights, like taking a peek where we're at randomly throughout the night, but most of the time not looking at charts and going to sleep early, seeing how the London session looked when I wake up, and then getting ready for New York. I think that's a better way to use the overnight session. But I understand our traders are all over the world. So you guys got to trade when you trade and, when the time that makes sense. So for me, I don't need to trade the overnight sessions. I'm not good at them, so I don't. I try not to. I get myself in trouble when I do. Where do you get those gamma charts? There's a number of, providers of that type of data. You can check out GexBot. You can check out TraderAid. You can check out, Spot Gamma. There's a million providers out there. They all have a cost because they compile the data and they manipulate it and show it in histograms or however you want to visualize the data. There's even providers that probably let you put an API and, pull it directly into your execution platform as well. But if you are curious on how to do that, you got to do some research on ones that can actually do that type of information. But the logic is there's a number of providers out there. There's a ton of education out there. Like I said, there's a lot of time frames that you can look at it. I have found it's better not to focus as much on, how it's moving on a minute by minute basis. It just can get you it can give you an information paralysis as well as just give you false signals at times. And I think it's a piece of the puzzle. I don't take trades really off of it, if that makes any sense. What is my methodology? Well, I'm a volume profile trader, and I tend to react based on how the market rotates based on the volume profile. So fading, if that sounds like it's fading moves in low volume areas like value area lows, that is a way that I can trade. You guys see me take a lot of reversal trades. If you see me on TopstepTV, a lot of that is based on the fact that we rotate out of low areas of volume into higher areas of volume. So it's a big part of my strategy. The rest is very much just based on delta and price action, order flow and options, other things like that. Nick, do you use TraderTainment? No, I don't know what that is. Sorry. I'm going to write that one down. I don't have a pen. There's my pen. Hang on. I don't. I've never heard of that one. I'm gonna look it up though, so I understand what you're talking about. We'll circle back at another session, but I've never used it. I assume it's a good data provider, at least provides information, probably similar to stuff that I'm using. So I'll check it out, see if it's something that I would use in theory or have a version of that I use today. But I'll get back to you on that. What indicators do you use and how do you help? How do they help you as a trader? Need to read before I speak. So indicators that I use: volume profile, delta by price, moving averages, VWAP, a couple others. It really depends on what I'm trading, how I'm trading. But if you're still learning, you're trying to define your strategy, those are ones that are easy ways to start understanding what's happening in the auction and why the market tends to move kind of the way it does at certain areas. Like I said, volume profile helped me understand the auction and understand how and why we kind of build volume and how support and resistance kind of gets established. So I think it's a great way to start learning how the auction kind of works, because who has the most interest at certain prices is basically how and why we move. So my suggestion is that's a great thing to start learning and understanding. You can look at it a number of different ways. You could look at it by candlesticks like Dakota does, and look at it by how ticks move on individual candles. Like he does a 100 tick chart or 1,000 tick chart. I can't remember, but it's a similar way that how I look at volume profile on certain time frames. It's just a way to digest the information. Delta is something else that I use to kind of tell me who's in control based on certain time frames, certain time periods. So there's 100 ways to skin a cat. My advice would be there's so much information out there, and I've had a number of traders that I've learned from, a couple mentors, but some concepts that they taught and the way they spoke about them registered to me better than others. So part of that is just your learning style, how you digest information, how you retain new information, and just your overall like discipline and demeanor. If you're someone that doesn't constantly crave data and analytics and new information, then some strategies may not work for you. If you're someone that's constantly looking, like I have very much a beginner's mindset in this, where if someone's got great data or has done research and has, good analytics to back up an idea or a concept, or if it's like hey, the breakout in the 5-minute opening range versus the 1-minute opening range versus the 30-minute opening range, like I would like to understand it. And what's the data? What does it actually show? That stuff I think is valuable, but it doesn't mean I'm going to change my strategy, but it's something that I may start throwing on my charts and watching to see, hey, is there an actionable setup that takes place when I do certain things? So as far as indicators and, how you can kind of do them, it really depends on what resonates to you. How do you digest the same information that I'm looking at? It's like anything else. Dakota and I use very different things at times visually as far as how and why we decide to enter trades, but it's the same information presented different ways. So one way works for him, one way works for me. But we take similar setups at times. So just a way for you to, I guess, understand what I'm talking about. How have you managed being a new father and keeping yourself mentally sharp and focused while balancing growing the family? Guys, it's still a work in progress. I'm not going to come up here and sit here in front of you and lie and say like it's easy. It's not. I have noticed, part of this is psychological, I guess, but when I'm on, it tends to obviously correlate with how well my baby has slept, how well I slept, and just, I have days I feel very mentally tired. I have days I feel very physically tired, and it's a different trade depending on how that kind of works when I come into the market. So, I have managed it the best way I can. I have an outstanding partner in life that, is a great mom and has understood that this is a career that I'm still pursuing, figuring things out with, and has been, more than willing to pick up the slack when I can't. And the same thing is true vice versa. When she's not there, I pick up the slack. So, and if that means I'm calling it a day at the initial balance without a trade, then that's the way it is. So I think that has made me way more efficient at this is having a good partner that's in this fight with me and believes in what I'm doing, I guess is what I'm saying. So that's part of it. I also have a good newborn. She's back to sleeping 7 to 7. So, that's pretty dang good for a 10-week-old. And I'm going to, knock on wood that continues. So that has made my life easier. Just me being able to get a good 7-8 hours of sleep every day, at least the last couple days. Hopefully we're continuing down this trajectory. But yeah, it's part of it is just, I have tried to just keep doing what I'm doing, keep taking the same setups, not getting emotional about it. But it's a different whirlwind, man. Like if I was a single guy in my, early 30s, like and was still doing this, it's a completely different animal when you factor having a family now. It's like I'm still trying to navigate on how to make the right decisions, not taking emotional trades, not losing more than I should be in a given day because I'm tilted and those type of things. Cause you have to think about that more. I can recover losses the same way I always have, but they sting a little differently now, if that makes any sense, knowing that I'm providing for a little one and there is someone else that depends on me a little bit more than they were a year ago or 5 years ago. So there's a lot, we could spend hours probably talking about that. So, I will keep giving you guys play-by-plays, but for the time being, it's going well. It's a whole whirlwind. I never thought I'd be trading full time and being a new dad, but here we are. We're still surviving. I've been unemployed and been full time for over a year. Been unemployed for 2 years, so we're still here. We're still kicking. Lifestyle hasn't changed that much outside of me not making stupid purchases. Any risk strategy for a 50K combine, micro or mini? Personally, I have never been good at 50K combines. It's just the drawdown gets me. I guess I'm too aggressive of a trader because I don't trade my personal account that small, and I never have. So it's always been difficult for me. But my advice would be micros, build from there. You can always size up to 20 micros in a combine. 30, what is it, up to 50 micros? I don't think trading that would be insane with $1,000 or $2,000 drawdown. But yeah, there's nothing wrong with scaling micros into a position, especially if you're trading NQ on a 50K, which is also crazy. But, there's ways to do it. There's a lot of people that prefer to trade the smaller one because the path to payouts can be, more beneficial. Like you can kind of hit it quicker. You can be profitable and continue to grow a smaller account like that. I have a lot of friends that just trade micros and small accounts because they work full-time jobs. So there's plenty of ways to do it. But that would be my suggestion, is just scale into those positions. Even if you're trading ES, go singles as you're kind of building in an area as we're consolidating. That's a great way to do it. Can I show my volume profile settings? Sure. So visible range, keep it at ticks. On ES, keep it at 4 ticks for 1 point. And value area at 70. And total volume. Super simple. Got a lot of questions, guys. I'll keep going. I'm always happy to do this. Can you please explain your use of Delta? Is it on a 1 hour or delay over 15-minute chart? So I'm a little weird. And part of this goes to I use to visualize Delta, I use Order Flow Labs. And so one of the things that I use is Delta candles, and basically they repaint based on what the Delta is on a specific time frame volume that I'm looking for. I typically use a 500 volume for how they repaint. So I'm looking to see, are buyers or sellers in control? Who's in control? How is it kind of shifting throughout a specific time frame? And then I got a 5-minute next to it. So you kind of see the difference of, a 5-minute versus a 500 volume. And like I said, I'm one of the weird ones that uses volume versus time to kind of visualize it. But when you're looking at something like Delta, there's probably a logic behind doing that versus on a time frame. So I use volume to pick out, or volume candles rather than minute candles, to display my Delta repainting of those candles, if that makes any sense. It's a little complicated, I know, but it gives me a good idea of, what the auction is telling me on a small time frame, how it flips from positive to negative and how to react. So as far as like a short time frame price action type trader that I am, it's a good system for me. When using visible range profile, is there a best time frame to use when using visible range profile, is there a best use time frame to look at? I could not read that question, sir. I apologize. So it really depends. I just like it because I could jump to right now a 4 hour, and it's going to spit that out without me having to change anything. So I now have 2 months of candlesticks, and I can see that full volume profile there. If I want to jump to the 5-minute, okay, well, looks a little weird, but you get what I'm saying. I can see like majority of Friday and the overnight session. So I just like having a quick, since I do this on the weekly time frame for the rest of it, I like having like an execution one, whether I'm executing on a 5-minute, 15-minute, 30-minute, 1 hour. I just have that perspective still, and I don't have to do a whole lot. It just makes life simple. There's no secret sauce to using a visible range. It just really depends on what are you looking at, what are you executing, and what are you trying to do? Are you trying to trade? Are you trying to do technical analysis? Are you trying to just visually have an understanding? Are you drawing your own support and resistance lines? Are you drawing your own levels? Because all of that will give you different views of how you can use visible range. Versus fixed range, I just like to look at it from a 1 week, each week with you guys, because that makes a lot of sense when we're talking about prepping for the week. What did the previous week do? What did the previous couple weeks do? But I can still then look at the last month, like a rolling month here, and there's the volume profile. So just makes life easy. Well, I guess I guess I can answer this one, or should we? Well, I guess it's going to be. Well, I guess we'll just release it now, or give the information now. Are you going to be a VIP coach? Yes. That will be official on Tuesday when I do the draft, I guess, of my team. So I'm excited. It should be a lot of fun. I'm looking forward to working with hopefully a number of you. I don't know how many people are supposed to be on the team. We're going to figure out what it looks like as far as time, but likely, we'll spend sessions like this inside of Discord or whatever works for the majority of the people that are going to be on my team, on how we want to dissect the information. But I'll be a little more, I'm not active in Topstep Discord currently, so I will be a little more active. Hopefully if we have a room and we can discuss if my concepts resonate to you, or there's something you guys want to learn from me, I am going to be having a VIP team. So it'll be cool. And then we'll see how that transitions into the Topstep Trading League in the future. So it's good to have the opportunity. I'm excited to continue to help traders. As you guys know, there's a lot of routes you can go when you kind of put your face out there and you've had some success. I have always chosen to not go, I guess, the path of a lot of people do in this space. So I'm just here to help people and continue to try to make money and survive, man. That's how I do it. That's what I've been wanting to do. I have no interest in kind of doing some of the other BS. So, yeah, continue to help whoever wants to be helped. As much as you want to engage with me, I'm happy to give it back to you. So I'm excited to do that as a part of the VIP teams. I don't know if we officially have a name yet. I think we were still kind of R&Ding a few. I did have a good one, but I think we're not going to use that one. So we'll see. I don't know. I don't remember exactly what the couple that we were thinking about are, but we'll learn more about it on Tuesday. When I'm on Fast Markets, I think we're going to do it. So that'll be a lot of fun. All right. So let's do a quick recap and we will let you all get out of here. We are a little over time, but I don't mind if it's for answering questions. We're already on ES. So let's talk about this. We had that big gap down. I don't know what to make of it outside of, Trump tariff tweets and threatening 50% emergency tariffs on a country. I'm sure that is logically the reason. Doesn't mean this is going to turn into Armageddon to the downside. Likely this gap will be filled at some point in the next day or two, 3 days, 4 days, who knows? I would imagine before FOMC, this gap has already been filled. So not going to worry too much about it. It is a much larger gap on the NASDAQ, being about 200 plus points. So I like structure being filled. So hopefully we do eventually fill that. But the logic is weekly pivot at last week's value area low. If we break down from there, I would expect a trip back down towards the 6,000 area on ES. If we do go fill this gap and just continue on up, then, everyone's favorite sound, let's go hit some air horns and, celebrate Mag 7's earnings being stellar, because I would imagine that's probably what does it. All right, that's the prep. Yeah, drill, baby, drill. Maybe don't look for longs in crude, even though I think there is potentially one around 74s and in GC looking for dips to buy. That's kind of the plan. That's that is the gist. That is the prep. I hope this has been valuable for everybody. Let's go Bills Mafia. I do not want to see the Taylor Swift Bowl again. So let's go support our Buffalo Bills and Josh Allen and everybody else. Have a wonderful evening. Coach Dakota will be on in about 90 minutes to give you guys his perspective going into this week. So tune in for him. If not, everybody, let's go watch the AFC Championship game. And I will see you guys tomorrow in the chat, as well as on Tuesday on Fast Markets. Have a good night, guys.